Hello everybody and welcome to my monthly Vietnam update. This time from Bern, the capital of Switzerland. The month of June brought several positive developments supporting the market. Key factors contributing to this positive sentiment were the rate cut and the increasing number of new stock trading accounts. Especially in May, we saw a notable surge in new trading accounts with over 104,000 opened, marking the highest number in over 9 months. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the bell so you don't miss any uploads. This influx of new investors, particularly local individuals, signifies a return of confidence to the market after a prolonged period of uncertainty. The increased inflow of capital from these new investors bolstered market liquidity, resulting in a significant rise in daily trading value from $521 million in May to $737 million in June, reaching the highest level in 12 months. Notably, on the 8th of June 2023, the daily trading value surpassed $1.1 billion, the highest in a year. The resurgence of local individual investors played a vital role to the market's improvement. In June, the number of gainers outweighed the number of losers, signaling a positive market breadth. This trend indicates a potential long-term growth trajectory. Furthermore, there were positive technical indicators as the VN index finally surpassed the 200-day moving average line, breaking free from the downtrend and establishing a long-term uptrend, which is a favorable sign for the market. Looking at the broader economic landscape, the second quarter of 2023 exhibited a slight recovery compared to the weaker performance in the first quarter. Various aspects of the Vietnamese economy, including industrial production, exports and investment, showed signs of improvement. Despite the global economy experiencing weak demand and inflationary pressure in the first quarter of 2023, Vietnam managed to achieve a modest GDP growth rate of 3.2%. Due to effective measures taken by the Federal Reserve in the US, the subsequent decrease in inflation from 9.1% in June 2022 to 4% in May 2023 further supported the recovery. This trend helped stimulate demand and reignite growth in Vietnam's second quarter of 2023. GDP growth started to recover from 3.3% in the first quarter to 4.1% in the second quarter. Vietnamese exports experienced a significant decline of 11.9% in the first quarter of 2023, and it continued to decrease 12.3% in the second quarter. In this situation, the Vietnamese government's issuance of stimulus policies such as rate cuts, tax cuts and substantial public investment package also contributed to the economic recovery of Vietnam. Industrial production showed a marked improvement with an increase of 1.6% in the second quarter compared to a slight fall in the first quarter of minus 0.8%. Foreign direct investments, FDIs, also exhibited a recovery from minus 2.2% in the first quarter to 2.7% in the second quarter. Looking at the chart, we can see strong growth from the public investment package, which plays an important role toward economic growth in the situation of weak global consumption. Also, the improvement in Q2 is pretty small. It is a turning point for the economy, and we strongly believe that the economy will keep growing and accelerating for the remainder of the year. The second quarter of 2023 marked a positive turning point for the Vietnamese economy, with a GDP growth showing signs of recovery. After a modest growth rate of 3.3% in the first quarter, the second quarter witnessed a notable improvement, reaching 4.1%. One sector that showed positive growth during the quarter was industrial production. After a slight decline of minus 0.8% in the first quarter, industrial production rebounded impressively, growing 1.6% in the second quarter. This positive momentum indicates the resilience and the adaptability of the Vietnamese manufacturing industry. Foreign direct investments, FDIs, also show the signs of recovery, with an improvement from minus 2.2% in the first quarter to 2.7% in the second quarter. This indicates renewed investor confidence in the Vietnamese market and highlights the attractiveness of the country as a destination of foreign capital. The Vietnam-EU Free Trade Agreement, signed in 2020, has significantly benefited Vietnam's export market. According to a study conducted by the Ministry of Planning and Investment, this free trade agreement is projected to contribute a substantial increase in Vietnam's export turnover to the EU. By 2025, export turnover is expected to rise by 42.7%, and by 2030, the increase is forecasted to reach 44.3% compared to the scenario without an agreement. Conversely, the import turnover from the EU will also experience growth, albeit at a much lower rate than exports, with an estimated increase of 33% by 2025 and 36.7% by 2030. In addition to the positive impact of this free trade agreement, the ongoing conflict between Ukraine and Russia has further highlighted the interest of European enterprises in diversifying their suppliers around the globe. This situation has made Vietnam an attractive destination for these companies seeking to reduce their reliance on a single market, such as, for example, China. Our visit to Vietnam in June provided us with the opportunity to witness firsthand the construction progress of the impressive $1 billion Lego factory in Binh Duong province. This serves a clear testament to the growing interest and confidence of European companies in the Vietnamese market. The combination of this free trade agreement, trade advantages, and the strategic positioning of Vietnam, a reliable alternative supplier, has created a favorable environment for increased economic collaboration between Vietnam and the European Union. This represents a promising outlook for the Vietnamese businesses seeking to expand their export markets and solidify their presence in the global supply chain. While the short-term outlook may still be gloomy, we believe that the worst is over and numerous positive outcomes are on the horizon. As the economy stabilizes, this represents a prime opportunity for investors to buy at the bottom and benefit from the expected strong growth during the period of 2024-2028, driven by the global economic recovery and the Vietnamese government's aggressive stimulus policy. Vietnam's long-term success story is just beginning. The development of the highway network is a testament to the nation's commitment to infrastructure investment. With the planned expansion of the highway network from 89 kilometers in 2010 to 1,150 kilometers in 2023 and a target of over 9,000 kilometers by 2050, Vietnam is following a similar path as China did in the 2000s. These infrastructure projects will play a crucial role in supporting the country's economic growth. Overall, the economic recovery in the second quarter, combined with the positive market indicators and the ongoing infrastructure development, paint a bright and promising long-term outlook for the Vietnamese economy and stock market. Vietnam's success story is just beginning, and we are confident in the future growth opportunities that lie ahead. This is all from me. Thank you very much for listening, and you're going to hear from me next month again with a new update. Thank you and goodbye.